This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, July 29th, 2015. So the euro continues with its correction out from those recent 108.09 lows, and the market is now coming into some key resistance. At this point, the downtrend remains firmly intact, and these rallies are seen as corrective, with the market potentially looking for the next lower top ahead of a bearish resumption. Really, the only key resistance that comes in that would compromise the immediate downside pressure is the high that we saw back on the 10th of July, which comes in around 112.15. Only a daily close back above 112.15 would take the immediate pressure off the downside. Sterling dollar. So the cable outlook remains constructive, with the market potentially putting in a higher low at the 153.50 low that we saw back on the 8th of July, ahead of the next major upside extension back towards and eventually above the 2015 peak at 59.30. At this point, only a break back below that recent low, that 53.50, would take the immediate pressure off the downside. Dollar yen. So dollar yen has potentially the possibility to see additional setbacks over the coming sessions, with monthly studies highly overbought and the market stalling out ahead of key internal resistance at 124.50. Look for a breakdown below recent lows that we saw at 123 to accelerate declines back towards that base, that recent base that came in on the 8th of July at 121.30. At this point, only a break back above 124.50 would compromise the current bearish outlook. Euro Swiss. So Euro Swiss saw a nice breakout above some resistance at 105.75, and the market is now poised for fresh upside towards that February peak at 108.15. Any setback should be very well supported initially by that previous resistance in the form of that range high at 105.75, while ultimately any setbacks should be very well supported ahead of 104, with only a break back below to take the immediate pressure off the top side. Aussie dollar. So a bullish outside day formation on Aussie dollar, with the market clearing the previous daily high and setting up the potential for correction out from those multi-year lows that we saw in Tuesday trade. At this point, the downtrend still remains firmly intact, and any upside is viewed as corrective, though we could see a rally up towards the 76 area. Really, any additional rally should be very well capped, with only a breakback above the 78 area to compromise the immediate bearish outlook. Dollar CAD. So dollar CAD has put in an impressive bearish reversal day on Tuesday, setting up the potential for additional declines over the coming sessions. Any declines are still classified as corrective, with the market locked within a more well-defined uptrend, with the market seeking out a fresh higher low ahead of a bullish resumption. Any setbacks should be very well supported towards the 126 area. Kiwi dollar. So Kiwi looks like it could be carving out a short-term base, with the market putting in those fresh multi-year lows several days back, just under 65, and there's room for additional upside, potentially up towards the 70 area. But ultimately, any rally should be very well capped ahead of the 70 area in favor of a fresh downside extension and bearish resumption. Only a close back above 70 would take the immediate pressure off the downside. SPX 500. So this market continues to chop, but at the same time continues to show signs of topping as it stalls out ahead of those record highs from May. A rally on Tuesday is within the chop that we've seen over the past several weeks, and the market is now confined to the middle of that range. At this point, a break below the March low from 2040, which has been an elusive support level, that level needs to be taken out to open the door and confirm a top and for an acceleration of declines. Only back above the May record high, however, would open the door for fresh upside and put the pressure on the top side. Gold. So gold has been locked within a consolidation off those recent fresh multi-year lows that we saw the other week, with the market now consolidating under 1100. A break back above 1100 could open the door, or a close back above 1100 could open the door for a needed correction, with daily studies highly oversold. But at the same time, the breakdown is very bearish and suggests that the market could eventually be poised for deeper setbacks towards key psychological barriers at 1000 further down. Really, only a close back above 1142 would shift the structure.